Hello everyone. In this lecture today we are going to cover of the meaning of merchant banking. We will see what is a merchant bank, roles and its importance. So merchant banking, its evaluation, meaning and role in Indian context. We will be discussing all this. The meaning of merchant banking. Merchant banking is the direct negotiated investment of private money into privately or publicly held companies by financial institutions or professional investors. The investors they make private placements of equity and in return receive private stock that is not registered with financial regulators for trading on an exchange. So in a way they are becoming financial partners of the companies. Merchant banking has been statutorily brought within the framework of the Securities and Exchange Board of India. The term merchant banking it has been used differently in different parts of the world. There is a lot of history that is associated with merchant banking. While in UK, a merchant banking it refers to the accepting and issuing houses. In USA, it is known as investment banking. In short, it is a combination of banking and consultancy services. It provides consultancy to its clients for financial, marketing, managerial, and legal matters. Consultancy means to provide advice, guidance, and service for a fee. So, according to SEBI, there are different guidelines that are stated by SEBI for being a merchant banker. So, according to SEBI's rule that was in 1992, it was stated that a merchant banker has been defined as any person who is engaged in the business of issue management either by making arrangements regarding selling, buying, or subscribing to securities, or acting as manager, consultant advisor, or rendering corporate advisory services in relation to such issue management. Here we will see that merchant banking it is like they are having two important services. One is banking services. This banking services and another category is consultancy services. So they are basically merchant banking. They act as financial engineer for a business. So merchant bankers are actually financial engineer for a business. Now banking services. These banking services basically helps a businessman to start a business and helps to raise or collect finance. So this is one segment of the service that is provided by merchant bankers. They provide loans to any business startup by providing loan to them. Another segment is consultancy services. For this, it provides consultancy to its clients, like consultancy which may be related to financial, marketing, managerial, and legal matters. Now, I will have the different functions of merchant banks. The basic function of a merchant banker is marketing corporate and other securities. Now, they are required to take up small allied functions also. What are those? A merchant bank now takes up the following functions as well, apart from issue management. First is promotional activities. Promotional activities is a merchant bank that functions as a promoter of industrial enterprises in India. He helps the entrepreneur in conceiving an idea, identification of projects, preparing feasibility reports, obtaining government approvals and incentives, etc. Some of the merchant banks they also provide assistance for technical and financial collaborations and joint ventures as well. So these are some of the promotional activities we can say are carried out by the merchant bankers. The second important function is related to issue management. In the past, the function of a merchant banker had been mainly confined to the management of new public issues of corporate securities by the newly formed companies or existing companies also further issues and the foreign companies in dilution of equity as required under FERA. But in this capacity, the merchant banks usually act as sponsor of issues. So that is the role that is done in issue management. They obtain consent of the controller of capital issues, which is SEBI, and provide a number of other services to ensure success in the marketing of this security. So this issue management, this IPOs are basically done successfully. This is also taken care of by merchant bankers. The services provided by them it is include like preparation of the prospectus, underwriting arrangements are also done by them, appointment of registers, brokers and bankers to the issues, advertising, arranging publicity and compliance of listing requirements of the stock exchanges, etc. They act as experts of the type, timing and terms of issues of corporate securities and make them acceptable for the investors on the one hand and also provide flexibility and freedom to the issuing companies. Third function is credit syndication. Merchant banks they provide specialized services in preparation of project, loan applications for raising short-term as well as long-term credit from various bank and financial institutions, etc. They also manage euro issues and help in raising funds abroad. So this is a third category of functions that are carried by merchant banks. They help in the process of raising fund not only in the domestic land but also in foreign lands. Fourth is portfolio management. Merchant banks they offer services not only to the companies they are issuing the securities but also to the investors in the form of portfolio management. They advise their clients. It can be mostly their clients and institutional investors, like regarding investment decision where they want to invest. What are the different avenues of investment that can be taken care of by the institutional investors that will generate more and more profit after keeping their long term goals also intact. So all these advices are provided, which is related to portfolio management to the institutional investors by the merchant banks. Merchant bankers they even undertake the function of purchase and sale of securities for the clients. If the clients are institutional investors, they want to sell their securities also. They also carry out that they want to purchase financial instruments. That is also done by the merchant banks so as to provide them portfolio management services. So completely their portfolio can be managed by these merchant bankers on behalf of the institutional investors or on behalf of the different large businesses. So some merchant bankers they are operating mutual funds and offshore funds also. The fifth function that is carried out is leasing and finance. Leasing and finance means many merchant bankers they provide leasing and finance facilities to their customers. Some of them they even maintain venture capital funds to assist the entrepreneurs. They also help companies in raising finance by way of public deposits. Servicing of issues, this is also done by the merchant banks. They have also started to act as paying agents for the service of debt securities, and to act as registrars and transfer agents. Thus, they maintain even the registers of shareholders and debenture holders and arrange to pay dividend or interest due to them. Other specialized services, in the categories of other specialized services, we can say that like corporate advisory services on issues are also given by the merchant bankers, like mergers and acquisition decisions, amalgamation decision, tax matters. It can be related to recruitment of executives as well, and cost and management audit, etc. So all this other specialized services may also be provided by the merchant banks. Many merchant bankers, they have also started making of bought out deals of shares and debentures. So the activities of the merchant bankers are increasing with the change in the money market. With the globalization, with the new upcoming competition among the different corporate sectors, different companies, we can see that the roles have also changed a lot from the past. Now, what are the different guidelines for merchant banking? The merchant banking activity in India, it is governed by SEBI, Merchant Bankers Regulations 1992. Registration with SEBI is mandatory to carry out the business of merchant banking in India. An applicant should comply with the following norms. Some certain norms are laid down by SEBI which should be complied with. So the applicant should be a corporate body. The applicant should not carry on any business other than those connected with the securities market. The applicant should have necessary infrastructure like office space, equipment, manpower, etc. The applicant must have at least two employees with prior experience in merchant banking. Any associate company, group company, subsidiary, or interconnected company of the applicant should not have been a registered market banker. Now, SEBI Merchant Bankers Regulations 1992. Let us have a look. A merchant banker will require authorization by SEBI to carry out the business. SEBI has classified the merchant bankers into four categories, which is based on the nature and range of the activities and the responsibilities. Category 1, they are allowed to carry out the activity of issue management and to act as advisor, consultant, manager, underwriter, portfolio manager. Now, under category 2, they are allowed to act as advisor, consultant, co manager, underwriter, portfolio manager. Under category 3, they are permitted to act as underwriter, advisor, or consultant to an issue. Category 4 is basically they can act only as advisor or consultant to an issue. Capital adequacy norms are there. Certain norms are there which are laid down by SEBI. Category 1, for category 1 rupees 1 crores, category 2 rupees 50 crores, category 3 rupees 20 crores, and for category 4 it is nil. Now from 9th December 1997, however, all other categories were abolished and merchant bankers can now only be registered under category 1 by SEBI. So all these categories have been abolished from 1997. Only category 1 exists when the capital adequacy norm is rupees 1 crore and they can act as allowed to carry on the activity of issue management, advisor, consultant, manager, underwriter, and portfolio management. Now, capital adequacy norms. The SEBI has prescribed capital adequacy norms for merchant bankers to register under the various categories. Minimum net worth set by category 1 was initially fixed as rupees 1 crore and later it was raised to the value of rupees 5 crores through an amendment of the regulation in the year 1995. Every merchant banker should maintain copies of balance sheet, profit and loss account, Statement of financial position, half yearly unaudited results should be submitted to SEBI. Merchant bankers are prohibited from buying securities based on the unpublished price sensitive information of their clients. SEBI has been vested with the power to suspend or cancel the authorization in case of violation of the guidelines. Every merchant banker should appoint a compliance officer to monitor compliance of the act. SEBI has the right to send inspecting authority to inspect books of accounts, records, etc. of merchant bankers. Inspections will be conducted by SEBI to ensure that provisions of the regulations are properly compiled. SEBI will give authorization for a merchant banker to operate for 3 years only. Without SEBI's authorization, a merchant bankers cannot operate. An initial authorization fee, an annual fee, and a renewal fee may be collected by SEBI. A lead manager holding a certificate under Category 1 should accept a minimum underwriting obligation of 5% of size of issue or rupees 25 lakhs, whichever is less. So these are some of the capital adequacy norms. It is mandatory under SEBI rules that every issuing company must appoint one or more SEBI registered merchant bankers as lead managers for the management of issue amount, and this side, so there is a table for issue amount is on the left side and right hand side is number of lead managers. So for up to 50 crores, number of lead managers is not more than 2. 50 to 100 crores lead managers should be 3. 100 to 200 crores lead manager should be 4. 200 to 400 crores lead manager should be 5, and above 400 crores 5 or more as may be agreed by the SEBI. However, the limit to the maximum number of lead managers to be appointed in a single issue was omitted through amendment in this regulation on 19th April 2006. So that's all. Thank you for today in this session. In our next lecture, we will be discussing about the different pre-issue and post-issue obligations and asset pricing. So that's all for today. Thank you.